This week, Ben and I are talking about tariffs, some Chinese retaliation, what this could mean for corn acreage, and then follow everything up with some weather discussion as we move through the early stages of the planting season. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Life is good, Will. We have our big Outlook conference here in Missouri, the Abner Womack Outlook Conference, Wednesday of this week. We're recording on Tuesday. So once I get through tomorrow, I'm going to feel pretty good. And that kind of symbolically ends my meeting season, if you will. So from here on out, I get to reflect on what went well this last year and start planning for next year. So get a little rest, recovery, and some planning time in. What about you?
Just moving through the Texas legislature, doing work with the Texas Department of Agriculture, enjoying this experience so far, and it's definitely kind of a shotgun experience. You know, you try and absorb as much as you can as you go, but
Is the
it's
Texas legislature bigger than everybody else? Is everything
well,
bigger in Texas?
naturally, it has to be, right? And Texas works on a biennial system, or biennium. So
Yeah.
every other year, the legislature goes into session for a handful of months. But we're not here to talk about that, Ben. We're here to talk about a lot of things in the news right now impacting agricultural and crop markets specifically. I'm going to give a quick rundown on what's going on right now, week over week changes. This is as of the close on Friday, so these aren't the most current numbers, but it gives you a snapshot into what happened last week. Looking at corn futures for May 2025, up 7 cents at 460. Oh, excuse me. December corn up 4 cents at 446. Soybeans for May down 46 cents. The soybean market really took a hit last week, down to 977 as of Friday. Soybeans for November down 45 cents at 984. Soybean oil on a cents per pound basis up 0.68 cents per pound at 45.84. Soybean meal by the short ton down $10.40 at 283.10. May wheat down or up 1 cent at 5.29. July wheat was flat at 5.42. May cotton also took a hit, down 3.54 cents at 63.36 per pound. December cotton down 3.93 cents per pound at 66.16. Rough rice for May 2025 down 0.44 cents or down 44 cents per counterweight at 13.075. That September rough rice contract, very similar, down to 13.35. And then that West Texas Intermediate Crude Oil contract took a heavy loss on the week, down $7.29 at 61.99. So, Ben, a lot of action, especially losses within crude oil, losses within the soybean futures. What's your takeaway as we looked at the changes from last week?
Yeah, kind of a risk-off environment across the board here. You're doing a good job, by the way, of adding in rice. I appreciate that. Thanks for reading that off there. But that West Texas crude oil price down $7.30 per barrel. I think that just signals the broader demand outlook. I think for products, the macro economy and the global economy is expecting just slower growth and slower consumer buying in the next couple of years. Or at least that's what
Mm.
that's based on expectations as of these futures markets. And so a little bit of risk off there, signaling some weaker growth.
Well, signaling weaker growth, you look on social media, and I feel like over the last week, everyone turned into an overnight economic expert. But, some rumblings about recession. What are the markers of recession, and what might that mean? And some of that would be just an overall lack of growth and kind of stagnation within markets and overall economic production. But Ben, I want to start off today's discussion talking about general tariffs. There's been a lot of news, a lot of maybe conflicting reports or a flurry of reports on countries coming to the table, looking at maybe talking about zero tariff. Other countries looking at boosting their tariffs and responding in kind to the United States. So looking at that picture, what does that really signal to the market whenever we're seeing such a whirlwind of news coming out, by the minute, basically, as we look at things developing?
Sure. So, the tariffs had been talked about for 3 months now. Of course, they've been on the campaign trail or mentioned on the campaign trail quite a bit, but the markets had heard of all the expectations around what April 2nd could bring to to the U.S. market, and they reacted because we finally got to see what that list of tariffs across countries would be. I think there's a lot of people that like to talk about tariffs. I've been pretty blunt that when it comes to tariff and trade policy, there's only one person really that knows kind of what the outcome of this looks like or what they want to do, and I'm certainly not him. And so I think there's a little bit of patience, I think, in some ways that needs to be exerted. Of course, there's real money loss. The stock market had a couple of days of drastic sell-offs for people that have money in stocks, and they saw some deterioration. So there's some anger. It's not any different than when a ref or a player does something in a basketball game, and you've got money on the line in that game. This is kind of how betting has kind of influenced watching games anymore. Sports betting when you're watching a game, and I know this isn't a philosophical thing, but a little bit of patience here, I think is always helpful. Taking a couple of deep breaths, recognizing that other people are hurting, and that there is some empathy that needs to be exerted. So I think the markets are trying to sort all that out as well. There was two waves to this. The reciprocal tariffs are what's getting a lot of the headlines, right? So this is the list of tariffs all the way from like 10 to 50% that were imposed on countries that largely had a trade deficit with the United States, right? Like that's in essence, that's what the formula was. But there was also a 10% across the board tariff on all imports into the United States. And so, it seems to me, and again, there's only one person that knows. I'm not him. So, but this is what it seems to me is it seems like those retaliatory tariffs are up for some form of negotiation to where countries can come to the table and kind of negotiate. I'm not sure those 10% tariffs across the board are all that negotiable, but we'll see as we move ahead.
Well, and it's one of those things where you talk about the need for patience and trying to figure out what might happen. And like you said, really only one person knows the direction that this is going to go or could go. But looking at history, one thing that's been discussed pretty heavily among some people that I follow on social media, looking at guys like Trent Loos talking about the Smoot-Hawley Act of 1930. Looking back at past history, that was something that during that kind of Great Depression era, there were tariffs placed on imports into the U.S. economy. Looking at that specifically to help support domestic agricultural markets, and that really seemed to backfire, as that was maybe an attempt at a long-term solution or an intermediary solution that really had a downturn and kind of had a reverse effect. So I guess we'll see what the idea on the implementation, long or short term or intermediary here in the U.S. market now. But Ben, one of the big things I want to talk about the kind of the friction now and return to trade war with China. This is obviously doing a couple of things. Saw the sharp losses in the soybean market. China, large buyer of U.S. soybeans. That's really putting a further clamp on that. But one thing that I think that is interesting to watch, we've already seen this expectation of increasing corn acreage. USDA having reports kind of indicating that. Do you think this recent action right now, as we're rolling through planting and in planting, is going to maybe even inch that corn acreage up even higher?
Yeah, so there was kind of two questions in there. So I'm gonna take the first question and then I'll come back to planning if that's all right. So as it relates to China, so you are correct. China retaliated with 34% tariff, increase of tariff on US products into the Chinese market. Soybeans did respond negatively to that. This is kind of an interesting time of the year where we're not really selling a whole lot of soybeans anywhere. It's kind of the Brazilian products are what's dominating the market. However, I do want to say that last week, when we look at export inspection, so soybeans actually leaving the country, we had about 30 million bushels of soybeans. That's on the top end of our historical range for this particular week, and 42% of those soybeans were going into the Chinese market. So they're still taking soybeans, even though it's not it's not as much as what it was earlier in the year. They're still taking soybeans. I think the concern for soybeans is if this stays in place for a long period of time, what that could do for soybean products towards the back end of the year. Okay, so that's kind of the commentary. Now to your specific question about planting acreage. we track this new crop futures of soybeans and corn. It's called the soybean to corn ratio, pretty closely. It is heavily favoring corn at the moment, and it has been for several months now. But it's heavily favoring corn planting even more so now. The reason I cast a little bit of doubt in terms of what this ultimately means for soybean acreage is because a couple of years ago I did a little study looking at all the factors that influence producer planting decisions or planted acreage, and the price ratio once you got to about February or January didn't really matter a whole lot anymore.
It's a little
People
bit
kind
too
of
late.
yeah,
People
it
set their
didn't really
plans and roll
matter.
with it. Yeah.
Yep, it didn't really matter. The thing that mattered and was statistically significant, which I'm an economist, so I got to stay statistically significant here. But the thing that mattered was moisture, or like just planting delays, or field work days. Things like that are tied to moisture.
Hmm.
And so I would sit here and say, the conventional wisdom is that this corn to soybean ratio is heavily favoring corn, and that might mean more corn acres, but you look out at what's happening, especially in the Eastern Corn Belt, with all this rain that we've had and the delays that could be possible given the weather forecast in the corn market. And that would suggest that we actually maybe see less corn and more soybeans,
Hmm.
or higher levels of prevent plant planted. And given that that factor alone is so statistically significant and more powerful in the planting equation than the price ratio, I can't I can't sit here and say that we're going to end up with more soybean acres.
Yeah. Well,
Does the price movement encourage it? Yes, but there's other things that are impacting planted acreage
yeah.
even more so than the price ratio.
Well, looking at that, so the market might be indicating that corn would be better to shift to even further. But like you said, you have those real world limiting factors. And some of that is we've seen mass, just heavy rainfall in the Eastern Corn Belt drifting over into some Western Corn Belt states, including Missouri, even down to the Southwest, down here to Texas. We've had some higher than normal levels of rain as of late. And that's kind of dragging maybe that planting opportunity, especially in that Eastern Corn Belt section. So, Ben, moving forward, just kind of last thoughts here. What are we looking at, or what are we looking at when it comes to planting, how that's impacting the market in the face of all these other items that are being watched?
Well, so to not have a whole bunch planted right now in Midwest states is not uncommon, right? We're sitting here; it's April 8th. It's not late, right? And I also sit here and I say, in years where we've had a lot of delayed and prevent planting, it's largely become also because we had a wet and cold fall, that prevented field work in the fall. We did not have that. Broadly across most of the Midwest, the fall into December was warm and dry. There was a lot of field work done. I'm getting ready for this growing season. So my answer to your question is the red alarm bells should not be flashing that we're going to have large amounts of corn not planted and high amounts of prevent plant because of this rainfall that we've seen. However, it does shrink our cushion, and the ability for error, right? And so I sit here, and the market's probably aware of what I'm talking about, but they're not alarmed. However, you look at the forecast, and there's a lot of rain, and so we're going to have to find windows. I think, especially in the Eastern Corn Belt, I think we're going to have to find windows to plant corn. There might be some corn planted in less than ideal conditions just because of that. But generally speaking, I'm not ready to pull the trigger and say that the weather and delayed planting is going to impact corn acres. I'm just saying that's something that could overshadow the price impact.
Ben,
And
outside of the Abner Womack coming up tomorrow, what should farmers and ranchers be paying attention to that could be notable, could move the markets, and could provide some good information?
Yeah, so Thursday of this week, we have two economic reports in the morning. So we have, or excuse me, later this week we have two economic reports: the Consumer Price Index on Thursday, the Producer Price Index on Friday. Both are a measure of inflation. Thursday, we get the updated April WASD report. There's not a whole lot expected in this WASD report, although traders are expecting a little bit more domestic demand for corn and soybeans to show up in lower ending stocks. And then next Monday is our second crop progress of the year. And Tuesday, the National Oilseed Processors Association will release their March soybean crush estimate.
All right, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, you can check us out online at brownfieldagnews.com. Also, look for us on Twitter. Ben here can be found geez, I normally know it, at Ben Brown
Ben
MU.
Brown.
At
Yeah.
Ben Brown MU. Ben, thanks again, viewers and listeners. Everybody, have a good time out there. And I'm Will Robinson on Brownfield.